don't know about you. I can't believe it. We're already halfway through 2019. It's the last trading day of the first half. How has tech performed? What about all those recent IPOs? Bob Pisani has some of those answers. He joins us here on set.
You know what I love? I love how wrong the consensus is. Humans are terrible at predicting the future, and nobody's worse than Wall Street at it. So remember when we started in 2000, back in January, everybody said the IPO market, oh, there's going to be 200 of them. Everyone's going to go public. Nobody's going to want all this stuff. They're going to price this stuff too high. The prices are going to have to come down afterwards. And the only thing anybody wants is Uber and Lyft, right?
Are they sure they even want those, Bob?
Wrong. Everything was wrong. So look at the numbers. We're at the first half of the year. We had 62 in the second quarter, 25 billion. It was the most active quarter by deal count in 4 years. It was the most capital raised in 5 years. And look at the 30%, the average return on IPO. That's twice what it historically has been. So the answer was, oh, it turns out there's people dying for most of this stuff. And what they didn't want initially was Uber and Lyft, which is what everybody thought.
You're the most honest man on television, so Morgan, I'm going to ask you to see him and raise. If I had said to you 6 months ago that, and I don't want to say nobody wants Uber, but Uber would not have done that great, but a meatless meat would have been up 500%, would you have said that would have happened?
No, I wouldn't have. And quite frankly, back to Bob's point, I'm not sure anybody or most people would have, which is probably why there's an argument out there now that many of these IPOs were priced too low.
Yes, that's a very interesting point. The people who bought this stuff, looking at it, were saying, you know what, Bob, it turns out the prices were not completely out of whack, and there was a lot more demand. So now we want to look at what's going to happen in the second half. And the list is long and getting longer. We've got people out there. We've got Poshmark, which is what that big peer-to-peer e-fashion site. We've got Airbnb potentially, Casper, Peloton, Postmates, WeWork. In the words of one IPO watcher, you have to have your head examined if you don't want to go public in this kind of environment right now. So there's just some of the bigger names that are out there.
Any of those making money, Bob?
Oh, sure. Yeah, they're making money. I mean, WeWork is a little bit controversial because it's really in a real estate play. It's not so much the new economy, although they try to run it like it's the new economy. It's a real estate play, so that one's a little bit. But Poshmark is out there, peer-to-peer fashion, e-commerce. We saw Real today. Their competitor go well. Postmates, you know, they do online food and goods delivery, and Casper's the online mattress firm. So yeah, I mean they're all out there. They're doing well.
I think what's notable is the fact that year to date, every sector in the S&P is higher, and quarter to date, with the exception of energy, everything else is higher as well. It's not like we've necessarily seen some great rotation out of what already existed into these new names.
Yeah, and what I mentioned the other day that's really striking to me is that the bigger companies are just getting bigger and bigger. We've got a half a dozen companies, $500 billion or more in market cap. And if you look at what moved the S&P this quarter, it really 5 companies were 30% of the gains that we had in the S&P 500. Microsoft alone was more than 5% of the gains for the S&P 500. So you got Microsoft. If Microsoft moves, Amazon moves, Apple moves in a quarter, it's going to drag the whole S&P 500 up with them. Finally, if that doesn't impress you, Brian.
No, it does, and it's it's actually very troubling because we've talked about it before.
Troubling.
You talk to CEOs, smaller companies, CEOs. I know we've talked to them. They hate that market structure because they're like, Brian, I'm trying to run a good company, but if Google goes up or down, my stock goes up or down, and I have nothing to do with Google.
No, it's true. And here's the final stat. If the top 50 companies in the S&P go up 1% on the quarter and the bottom 50 go down, bottom 450 go down, the S&P is flat. That's how important, and really it's the top 20. If a small move, 1% up in the top 50 companies, the other 450 go down 1%, the S&P is flat. That's how big the market's become.